Hi there, Dan Martell here, serial entrepreneur, investor, and creator of SaaS Academy. In this episode, I'm going to share with you what is accrual accounting, accrual versus cash. Hey, first off, I'm not an accountant, but I play one on the internet. I literally have read and looked at probably 2,000 different balance sheets, P&Ls, cash flow statements, you name it. And I've had to teach dozens of SaaS founders specifically, and that's why you want to watch this, on how to think about accrual accounting versus cash accounting. It's not as complicated as the friggin' accountants want to make it seem, but be sure to stay to the end because I'm also going to share with you my precision scorecard, a framework to help you understand how to measure specifically deferred revenues and other things we're going to talk about in this video so that you get a weekly report to keep your eye on to make sure your business is moving in the right direction. Let's get into it. So here's a funny story. Back when I was building my company Spheric, I had done 2 other companies prior to that point and they failed, okay? Maritime Vacation and NB Host. And I finally start with Spheric Technologies, and somewheres in one of the business books I was reading at the time, they say you really need to understand your numbers. You've heard this from so many people. Telman Fertitta, a crazy restaurateur, incredibly successfully billionaire, talks about it. You need to know your numbers. Warren Buffett, you need to know your numbers. And I was just like, man, I know how to make money, but I don't understand what the accountants do with all those transactions. Like I can't tell you how to read an income statement or a cash flow statement or a balance sheet, etc. Like they were all things that were like I had them and I had to sign off at the end of the year to make sure they were accurate because if I could go to jail if I didn't pay my taxes, etc. But I didn't understand. So I reached out to this guy named Dave Ritchie. He was a local entrepreneur. He owned a shipping company, a dry cleaning company, some restaurants, some real estate. And I remember this, and he was probably about 14 years older than me. And I reached out to him. I was just like, hey, Dave, I was wondering if you could teach me how to read financial statements. And he was kind enough, like knowing what I know now, how ridiculous that request was. He replied, and he's like, hey, Dan, I'd love to meet up. I'll teach you what I know. But the truth is that's what accountants are for. And I kind of dove into it and realized like he was right. At the end of the day, the accountants should do all the heavy lifting, but what you're responsible to do is to direct them into the right way. So I'm gonna share this because accrual accounting for SaaS is a must. It makes it ridiculously impossible to understand the business if you don't do it. So let's dive into the specific aspects and why it's important for you. Number 1, clearer cash flow in better decisions. So what the difference is, okay, is accrual accounting essentially says the income is collected when the service is delivered, okay? So if somebody pays you for an annual contract up front, you didn't deliver the service yet. You might have delivered that month's value, but you didn't deliver the whole year. So what ends up happening is that check for 100 grand, or let's use 120,000 so we keep the math easy, is 10,000 every other month is looked at as like an accounts receivable. It's an invoice for a future date, owed on a future date, versus cash, versus saying in my account, which is, look, the truth is small businesses all around the world, they do cash accounting. I get it, it's simple. They're like, am I doing good? How much money is in my bank account? But that's not a true understanding of how your business is doing because the last thing you want to do is have all these customers, you're doing 3-year annual contracts and they give you all the money up front and you're sitting on millions of dollars of what you think is profit. But the truth is you still have to operate. If you just think about, you got expenses for 3 years into the future that's coming from that pot of money. And if you don't look at the reporting from an accrual point of view, you're gonna think that you're rich, you're gonna go buy yourself a new Lamborghini, and then you're gonna have customers pissed off because you don't have any developers, no money for the servers, no money for customer support, and they're gonna leave and then ask you for their money back, et cetera, et cetera. So I mean, that's the real reason is you want clear cash flow understanding so you can make better business decisions about should you hire that extra engineer? Are you able to upgrade your systems? Should you buy or change CRM solutions, et cetera? Whatever is going to cost you money, if you don't have an accrual process to project into the future to understand what your cash flow is going to look like, it's going to make it harder to make good decisions. Number 2 is we want to track MRR with accuracy. MRR stands for monthly reoccurring revenue. And I remember one time I was working with a coaching client, Adrian, and I said, hey man, what's your MRR? He goes, I don't know. I know my ARR. Well, the good news, if you know your annual recurring revenue, divided by 12, and that'll give us our MRR. But here's the risk of not knowing MRR is if your goal is to double in revenue, you're at 2 million ARR and you want to go to 4 million, is the incremental change on a monthly basis for ARR is so small. You go from 2 to 2.2 to 2.4. It doesn't feel good. As a percentage, it might look, if you're getting 7-8% a month. But what I love is the monthly. I love focusing on the monthly because what I learned a long time ago is the more frequently we can measure and change and affect. And the beauty of software is we can get down to the weekly numbers. We can look at our pipeline and our revenue and cash collected. We can still get the cash portion, but we can start looking at MRR and are we growing it on a month over month basis? And it helps us smooth out all those, maybe we have customers that are not going to renew, or maybe you have some different changes in your prices. If you don't look at it on a monthly basis, you won't see those big shifts to give you feedback. So tracking MRR accurately is the biggest reason for you to move to an accrual-based accounting process. Number 3 is identify business trends. So I remember one time I was working with another client, Emmerich. He had made a big pricing change in their software. They have a social media marketing software. And because they weren't looking at things on a monthly basis, on an MRR level monthly, and it was just kind of like going, that pricing change had a negative effect. But the first month it had a negative effect, they just assumed, it's that time of year, September, it's a slower time of year for us. Then the next month they were like, maybe there's something going on, blah, blah, blah. It took 3 months, 90 days for them to realize, holy moly, that change we made back 3 months ago is reduced our monetization by 20%. Change it back. We need to really focus on the monthly costs, the monthly expenses, the monthly income so that we can make better identification of business trends, both support tickets, costs, like everything in your core business needs to be done on a monthly basis in regards to when the service was delivered and when the expense was occurred, so that we can ideally reduce the distortion. That's what it's called, is distortion in your numbers, okay? So make sure that you look at accrual so that you can make better identifications of business trends so you can make better decisions. Number 4, financial implementation. So 2 things you need to understand to just implement this. As an entrepreneur, it's really simple. Is the income, it's deferred as receivable, it's paid up front. So if they pay on a monthly basis, no worries, no harm, no foul. That's easy because they're just going to pay their credit card. But if they pay up front, you want to defer that income as deferred revenue, and it shows up as a receivable in your books. Okay, so deferred revenue. So you might have a bunch of cash, but every month you might have a deferred revenue line, which is the amount of money that you expect because clients pay you every month, and that's going to show up. And the second thing is your expense should occur the day of service. So maybe somebody invoices you today, but you don't actually get them to do the work until the future, or they do the work, but they don't invoice you until 30 days later. From an accrual point of view, you want to record the expense on the day of service delivered. That's how this whole thing gets cleaned up. That's why people are like, what if people pay me up front? I just answered the question. You defer it as a receivable that they owe you every month. And if you get a service, you need to expense it on the day they delivered the service. It has nothing to do with when you paid it or when the invoice was given to you. So that is accrual accounting. You need to do it as a SaaS founder. It just cleans up everything. Number 1, it clears up your cash flow. Number 2, it helps you track MRR accurately. Number 3, identify your business trends. Number 4, most important, is the financial implementation of it all. And the good news is you ask your accountant to do it. You don't need to do it. Now, I mentioned at the beginning of this episode, I want to share with you my precision scorecard. It is a framework and a template that you can implement into your business to track your revenue, track your expenses, track your profit on a monthly basis. Because here's the deal. If you have profit and you don't reinvest it into next month under growth opportunities, you're giving up 7 times potential revenue or valuation into the future of your business, because that dollar reinvested could have helped you grow in your monthly recurring revenue. And the valuation on average for a SaaS company, if they're doing about 3 million plus, is about between 4 to 7x their top line MRR. So if you've got profit, you want to reinvest, the Precision Scorecard will help you track that on a weekly, monthly basis, help your team get focused on quarterly outcomes, build the accountability. Just click the link below to download your copy of my Precision Scorecard framework. And if you like this video, even though it's super dry topic, accounting, literally, I find it boring, but without it, we don't have the optics and the visibility to grow our business. Be sure to like this video, share it with somebody that you know is having this issue or not doing it right, so we can get them straight. And be sure to subscribe to my channel. As per usual, I want to challenge you to live a bigger life and a bigger business, and I'll see you next Monday. Boom.
Oh.